Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, May 9th, 2024. So today was, the futures were kind of light. They were down close, I think, 9 points. And then by the time the market opened, it wasn't down that much. You can see the S&P found support, and from there, it was pretty much just this little kind of dip right here at the 52.08, and then it was just kind of up again. So today was really the Bulls day from start to finish. We got unlucky. We got into the Condor trade right here, and it kept going up. We had the 52.15s, but the thing is, it went up too quick here. Took us out by, I think, 10 cents again. And again, it's more we can do these where we don't put the trades on, we don't put the stops in. You're just risking money. But again, these fell right within the brackets that we had, which was the 51.85, 51.75, 51.15, 51.20. So they're there, but it's just not the way I'm using these. I'm putting the stop where you don't lose anything, and that's exactly what happened today. So another day with no gains, but as I said, it's going to happen. It's going to happen more, probably, could happen 2 times a week. It all depends on how it goes. But as long as we have 2 or 3, winning days, we're good to go. So I would be, I get put in our premium report, I would be a little bit skeptical right up here. First off, we have these bearish divergences on the 15-minute chart that's been expanding. And this pattern right here, it looks like almost like it's a fifth wave. And it's forming a tweezer or a bearish wedge, let's say. And if we look, you can see where, this is where they're kind of, sellers are stepping in when they hit this. And the thing is that when they break this little tweezer pattern, or, let's just say a bearish wedge here, that's probably going to complete the wave 5. And it all depends on, are we going to be entering in another, is it going to subdivide? I'm not even going to get into all that. But this is, your little tweezer, formation right here. And you got to be, careful of it. If they open up and gap above it, then, the bulls are good to go. And we're probably going to see a run. If they can gap over this to 52.18, my guess is they're probably coming up somewhere into the 52.25. And if they can get through that, then we're coming up to levels that we're going to be testing these all-time highs. And as I've been putting in the report, that's not a bullish thing. If we make a high, a new all-time high in May, it's actually a longer term. It will turn into a longer term bear market. So the best thing for the bulls is take your breather. Do some more backing and filling. They had a fantastic run off of the October lows here, and now it's it's time that they need to give it come down, do some testing, and if they don't, that's when we're going to be. It's going to be a longer time period that I'm expecting the actual low to hit, and if the high was made in April, where it should be, and we don't make any new all-time highs, then I'm anticipating that we're just going to have another drop, and we're going to come down and test the 200-day moving average at the 47.81. This has always been my target down here. But again, if they head higher here and they make the new all-time highs, then we're looking at a longer term, kind of a bear market situation that we're going to be in. So we have to just kind of wait and see how things line up for the remainder of May on this. But right now, you can see this is. I had said that I was anticipating that we're going to take out these highs, but we're going to do a little backing and filling to bring momentum down. This is exactly what happened. So if they open up tomorrow, I wouldn't be against taking a risk on the short side, because I can imagine it being something like this, where we pop up and then come right down again, and that was really the start of this move. And it would be kind of fitting where, it would be the same type of really pattern that's in play. So it showed you in the morning at the what do you call it, the morning notes, that this was the pattern, this is the fractal pattern that I was looking at. Obviously, this broke out of it, so they're not the same. I just wanted to go over that. Fractal patterns are something that we watch. We don't. It doesn't mean they're going to repeat identically, but it had the same thing there. And this was, if it was going to follow this pattern, this was the next move down. But obviously, it did a reverse on this and popped out of it. So you can see even here we have bearish divergences in place, and as I said, I would be very careful up in these levels because we have the VIX that's at, levels where we have seen some pretty good bounces. So if the bulls head higher, keep an eye on the 52.18, 52.28. The bears really, they're going to have to get it back below this, the 5200. And it really even did, the 52.96. If they can do that, then you anticipate we're coming down to the 51.67, possibly even down to this 51.38. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.